All right. Thank you everyone for joining. We will just wait another minute before starting just to make sure that everybody's joined. You can see that the numbers are going up, which is really exciting. Thank you everyone for joining. We're just going to wait another minute just to make sure that everybody's joined the session, and then we'll get started. All right. I'm going to get started, but I know that some people are still joining, so welcome everybody that's just joined. I'm Tori Rudolph, Head of Strategic Partnerships at Fintech Australia, and we are thrilled to present this webinar hosted by Zone & Co today. Before we start, I would like to acknowledge that Fintech Australia is presenting and recording this webinar on the lands of the Gadigal people of the Eora Nation. I'd also like to acknowledge the traditional custodians of the various lands on which you all work and join from today, and the Aboriginal and Torres Strait Islander people participating in this webinar, and pay my respects to elders past, present, and emerging. A bit of housekeeping for today. Today's session will be recorded, so we will send that to you after the session's concluded, so keep an eye on your inbox. And we will be doing a Q&A, so you'll see a Q&A button at the bottom of your screen. And today's panelists will be answering those questions throughout the session, and also a dedicated space at the end in case they skipped over any questions. And with that, Zone & Co is one of our valued partners here at Fintech Australia, and we're really excited for the session today, Scaling Smart, Building Investor-Ready Finance Operations in a Global Fintech Market. So with that, I will hand over to Chad Wunderling, the Chief Financial Officer at Zone & Co, to introduce our panelists and lead today's session. Thank you, Chad.
Yeah, thanks so much, Tori, and great to be here with everybody. Thank you for joining us. And just as we get started, I would like to introduce my fellow panelist, Annalise Clow, who's with NetSuite, and also Harriet Lambert with 5V Capital. Pleasure to thank you for joining us, and pleasure to be here with both of you.
Thank you.
Awesome. So, look, folks, I think, it's not that we are in a period of change. It is that change all around us is accelerating in this day and age. And I think it is the CFO sits at a very unique intersection. If we go to the next slide, at a very unique intersection of the change that is indeed accelerating, okay, within the space today. And I think I recently heard, maybe some of the folks out there have heard this, but it's I recently heard that the CFO is the new age CEO, and that is the chief everything officer. And so one phrase that I often use or took to is if no one owns it, the CFO owns it. Reason being is that the CFO, more so than any time in history, is not the back office operator, but instead is the strategic advisor and really the growth partner. And I think we've seen the role of the CFO expand, but we've also seen the expectations expand of the CFO and what is expected of the CFO. So I think, look, but at the core of the CFO duties are really the basics of scalability, creating the environment for growth that permits data as well, that permits and promotes being really transaction ready, okay, and creating the infrastructure for financial operations that are indeed investor ready, okay, in a sense, for those transactions. So before we get into the content, and as we deep dive right away into this content, which we're really looking forward to, as we consider the evolution kind of finance within the fintech space, first I would like to ask one, Annalise, from your perspective, as you consider kind of the context and the role of the CFO from your experience at NetSuite, kind of where are you seeing kind of the pressure points in finance leaders as we think about the role today and how that role has evolved to be more of the strategic advisor within your customer base at NetSuite? How are we seeing that?
Yeah, I think, thanks, Chad. I think it's really the demand for real-time data is becoming really important, and getting insights from that data. So you need to have tools and infrastructure that is all in one place, is real time, and is really easy to access. So that is probably the biggest thing. The digital transformation is happening at a million miles an hour now. And that, what you said before, the rapid pace of change is just driving the need for those insights being at the forefront, where you don't have to go digging for them and have an army and an analyst to try and pull that information out of the system.
Yeah, that's great. And folks, by the way, if you have questions or have questions for Annalise or Harriet, just to create this one as valuable as possible and as interactive for all the participants here, feel free to drop them in the chat. We'll do our best to kind of get to them in the most natural way possible. Now, Harriet, as you think about it from your seat, from really the investor seat, and as you are evaluating investments, how much weight do you put on kind of the role that sort of the finance team plays in the business and their ability to deliver quick insights as you get in to do your due diligence?
So I would say I mean, it is a lot of emphasis. And naturally, when you are going to look into investing in a business, the relationship that you form first is with the finance team, because they're the people that can give you the answers the quickest. And they're the closest to a lot of the detail. I'd say a couple of things around the changing role is, as investors, we're now looking at different cuts of data. Traditionally, we'd be looking at potentially just your financial, your P&L, balance sheet, cash flow. Now we're much more looking at the different types of data, like pulling in from different forms of the business and reconciling that as well with what the financials say. And so I think that that's becoming much more pertinent when we're looking at an investment. And I would say that the CFO as well, to highlight your point, the everything, they're across everything. And now more than ever, I think about the investments that we have made, and the CFOs are across absolutely everything.
Yeah, that's a great point. And I think, what I've seen in my experience is is a bit of the the CFO is the owner of the business model, which beyond just the finance and beyond just the data, the CFO is the owner of the business model, in the sense that, to Harriet's point, and also marrying that with what Annalise mentioned, is the data, access to the data, but then being able to really use that data to provide insights relative to that business model. And then you marry that up. If you think about getting into an investment, and Harriet, your team is, as the CFO in the CFO seat, you have to really deeply understand, when it comes to being investor ready, the investment thesis that investor has. What is it? How are they going to drive value? What is it from their perspective that is appealing to them? And being able to marry the data, the insights, the business model, and that investment thesis up, I think really there's really only one role within the company that can do that, and that is definitely the CFO. So if we transition to the next slide and just consider this, it is oftentimes, as I've had other colleagues and just seen through experience, CFOs getting into their roles, building the investor ready infrastructure, and oftentimes what I refer to as preparing for a transaction. You don't know when it's going to happen, but you've got to be ready in the event that it does. Is look, what what got you here definitely will not get you there. And so building and creating that infrastructure for scale is going to be really, really, really critical. And and so, from your perspective, Annalise, um, going back to you, is as you think about creating scalability and allowing finance teams to really, our role in finance and our role from a systems perspective, what I often remind our teams of is to enable the business, to allow the business to do what they want to do, obviously within certain confines and points of control. But what are the common pain points you are seeing as companies out there and customers that you interact with on a daily basis, work through kind of and work towards their scale? What are those pain points?
Yeah, thanks, Chad. I think when you're scaling a business, you really need to think about the technology that is going to support you as you grow. So, adding more people into the system to work within the processes and be able to do all the normal things like invoicing and getting visibility of what's going on. But then you also need tech that enables you to expand, and whether that's locally or globally, and be ready at your fingertips in real time. When you're scaling a business, things move at a million miles an hour, and you have to have technology that is accessible and available, which gives you those insights. I keep coming back to insights because that was probably one of the most important things that really, because my background while I'm at NetSuite now, I developed a software business for field service management, scaled that, and exited that business to Oracle, and did that on the NetSuite technology platform. So when you really start and you've got a handful of people, and then your business starts growing at 80% year on year or 100% year on year, the technology needs to support the business as it grows. So the pain points you see as you scale is that tech not supporting moving from somewhere like Australia to the US, and all of the compliance issues associated with that, and then obviously going into the UK as well, and then so that's just actually putting footprints in all of these countries. But then, what if you want to sell your products into different countries, maybe even in the Middle East or in Mexico, in all these other countries like we did? You need to have infrastructure that supports that. And when you're scaling a business and you're doing it at pace, you do not have time to sit there and think, oh, I need a whole new ERP to be able to do this. You need a technology platform that is actually going to be foundationally strong, integrated, and is real time and accessible. When I say accessible, being able to just log in from the internet anywhere around the world and have the information at your fingertips. So they're key things. And when you've got the data all in one place, you can then get investor ready insights, and you can pull out the metrics that you need for investors. And that creates a lot of confidence when you're talking to investors about your business.
That's great. And Annalise, just as a follow-up to that, as you refer to and speak the kind of pacing, and really what you're speaking to is you're speaking to the accounting and finance function almost keeping pace with the business. What we often see as companies scale is the investment is, really in one of two places within the business. It's within product or R&D, and then it's within go-to-market. And then trailing well behind is either G&A and finance. How do you think about and how do you advise finance leaders to ensure that that gap is tight and closed? Because if that widens too much, then finance, we're going to be way behind. and we're going to be struggling. How do you advise kind of CFOs and finance leaders out there to pace it at such a proper level to where there is that proper investment relative to the business?
Yeah, to support the growth in the finance area,
Yeah,
you mean?
yeah, yeah.
Um, I think if you have when you're scaling a business to exit, let's take that for example, you've got an end goal, which means you really should be across a lot of the exit metrics you need. So you roll that back through the finance team and what information you need to capture. How do you need to track whether it's the rigor of the sales or the spend or the recruitment, hiring, or whatever. You've just got to be across that. So the earlier you invest in finance, and like you said, Chad, I think the finance guys get lumped with operations as well. So I would say in a
Uh-huh.
small business that your CFO will be a COO as well. So they'll be doing process system efficiency improvement, and that's very important. And things, when you're scaling a business, the roles change really dramatically. Like you'll go from needing generalists in your business that have to be, putting their hands into everything to get things done, to specialists in different areas. What is super important though is to lean on technology to do the heavy lifting of admin tasks and process tasks. For example, we were using NetSuite. We were able to build in all of our CRM flow, our producing our software contracts straight from the opportunity record straight within to do a quote to a customer, which actually could be that was also the invoice. It gets paid from the customer, and it's all in one system, so that you're actually not going outside the tech to do anything. So from a finance point of view, you've got all of the information on your fingertips. So when you're trying to do, you know, um, you know, calculations, cost of customer acquisition, and you're doing all these, ASP metrics and a whole heap of stuff. You've just got all the information where you need it to make the calls.
Yeah, that's great. Now, Harriet, as you think about whether it's an existing portfolio company or you are considering an investment, and as you consider kind of the scalability sort of the finance function and the business growth, you know, when you come across this kind of like operational debt, which could be defined as just like, the accounting and finance function lagging behind the rest of the business, like how much does that impact your confidence in a company and in potential investments ability to kind of scale and continue to grow efficiently? Talk us through that.
Yeah, sure. So I would say that it is more often the case than not that we find that, as you've outlined, that the finance team is lagging behind the rest of the business. So I would say it's not a new challenge that we'd face. It's not novel. It's quite common, in fact. And to your point around needing to supercharge the business, as an investor, we expect to come in, and if you think that the business is flying before you receive investment, the anticipation that it will go even faster post investment. So that's definitely something then we weigh up. When we're coming into a business, and one of the first things we assess is the systems architecture, and is the business set up, like org structure, is it all is it set up for this supercharge of growth? And I can think of a couple of examples actually where the system was right-sized for the business at the current scale, but based on the plans from the rest of the management team, and the global opportunity and things, because it wasn't set up for success, the minute you start trying to achieve these goals, you'll hit roadblocks. And so one of the big things I would say is that whilst the system might be good for now and probably for a year ahead, as an investor, we sort of take a 5 to 7 year horizon around how we look at investment. And so we're wanting to make sure the system is set up for the 7 year journey, not necessarily the 1 to 2 year scale up.
Yeah, that's an interesting point. So take us back to, you know, as you guys evaluate the architecture and kind of almost begin to do sort of your initial due diligence, talk us through what you look for. One, what you're sort of looking for, or what are the key signals of, okay, this company has, for a lack of a better phrase, some pretty strong sort of, entity level operating controls from a finance and accounting perspective. Talk us through that kind of that architecture that you guys evaluate at 5V and let us into that.
Yeah, sure. So I guess we're testing the way that we're looking at information. We're going to ask for multiple different cuts of the same thing. And so it's not necessarily a system that we see. It's more, can a finance team and a business keep up with our lots of questions? And so we're going to, yeah, as I said, we're going to ask for revenue cut by all these different ways. We're going to ask for customer lists. We're going to ask for all of that sort of thing. And we're wanting consistency of information and also timeliness. And so if we can see that we're getting responses when they're expected to be there, and we can also see that the data is matching up with what the story is being told, and we can see these proof points, we can see that that there are controls there and the system is set up. The business is operating and investor ready, I guess.
Yeah, that's great. Now, Katie, if we transition to the next slide, I think as we think about being investor ready, I think what it really comes down to, if I could probably describe it, and partially from my own experience and even to a degree of my own failures, is that it's really all about speed. Okay, from speed to close, speed to insights, speed to data, and it's about kind of creating that infrastructure and that framework. And in addition to really nailing the basics, and I think particularly within the world that we're in today, there's a little bit of when it comes to AI, we want to turn the doing by leveraging AI to do the doing into us being really the reviewer. So I would say, Annalise, to you, as we think about speed and velocity and access to data, which you've talked about in addition to insights, where are you seeing kind of the biggest gains from automation at scale as we think about kind of that need for speed?
Just let me turn myself off mute. Yeah, you need to, the automation, when you think about all your processes and systems, automation should be the top of mind. Automation and standardization as much as you can, to certainly in your systems and processes, to be able to do things at volume. The world starts to look really different once you start growing at significant pace. And if you don't automate and standardize what you do, you will try and hire an army of people to help you, which will cost too much, and then you'll just burn cash. So you're better off really having a look at what does volume look like, and this is where your CFO can really help. So do some forecast planning, top down, bottom up positioning, and really start to think about, if we have scenario planning, once we get the run rate of X amount of sales or X amount of revenue, what does that look like to the business? And how do we actually lean on the tools and the technology available to really automate as much as you can? Because once you get pace and you start picking up speed, it's nearly too late. because you just have this massive backlog which costs you too much money to keep up with.
Yeah. And I think kind of in order to um kind of create the highway and the infrastructure for speed, I think it really comes down to nailing those basics up front. And such things and such examples as um from cash, the AP ledger, just nailing and having those basic things down, from reconciliations to just like the basic framework that will allow and promote. Because if you can't get cash right, if you can't get AP right and those subledgers right, then then good luck with with the other stuff. And granted, those things are boring. There's nothing glamorous about those things, but those things are really table stakes, particularly as we think about being investor ready. Now, Harriet, from your side, is like, look, you know, no matter how great a finance function is, you're not going to give, you're not necessarily going to increase the multiple that you would pay for an investment just because of their finance function. But the what is kind of like the cleanliness and the infrastructure of a finance function within a business? What does that tell you about the company as a whole? And to what degree might that be appealing to you or give that company in some way a unique edge, um, or even help speed up deals as you think about, time to close
Yeah,
if you're
so
considering an investment?
Yeah, so I think fundamentally, when we're looking at investing in a business, we don't just go out and find a business. We've done a lot of research to get to that point. We've looked at the quality of the market, we've looked at the players within that market, we've looked at the products, the services, the position, all of that sort of thing before we ultimately come to the point where we'll approach a company. And so we're looking at all of that quality. And then when we're looking at who we want to partner with, it's all about building that trust. And so if you can prove that you've got, as to the point of these boring, these reconciliations and these AP and all of that sort of thing, if you can prove that you're rock solid on that and you're quick to finish, quick to complete, quick to close, all of that, it just goes towards building that trust. We can trust that you are the partner we want to partner with within this industry to capture that growth. And so it's not, as you said, necessarily going to win the deal, but it all goes to trust.
Yeah, that's right. That's right. That's a good one. And I think the other thing to remember, at least from the CFO seat, is when it comes to being an investor ready and considering investments and capital from outside investors, it is really the CFO that is seen as the steward of that investment. And it really does come down to that trust. So that's a great point. Now, even as we take it a step further beyond just scaling infrastructure and data, but Katie, as we go to kind of scaling globally, as I referred kind of in the opening, is like, look, finance has gone from the back office and now not just to the operating front office floor, but in a degree, of course, to the boardroom as a strategic advisor. And it's the infrastructure really what earns you that seat at that table by having those table stakes nailed. With that, now I'll hand it over to Annalise to kind of show how fintechs are using cloud native ERP to centralize and to scale.
Yeah, thank you. A nice slide here, which has some bullet points there, but I can talk through a little bit of my experience and touch on some of these points as we go through. So in 2018, I started a company. I split it from our other business, which is an incubator for some product tech for NetSuite and field service management solution, which is now NetSuite's FSM solution. But that really started in 2018, and we started with a startup with a handful of people, so 5 people, and then really grew that over a 4 or 5 year period until we exited with Oracle NetSuite. So it's a really nice little use case. I can talk through some of the challenges and what was really important with investing in the right infrastructure, and also that sort of automation piece we talked about before. So when we think about scaling globally, the infrastructure and the technology that you select is really important. And it's important based on what your overarching strategy is. We always thought to scale globally. So if you're thinking about scaling globally or even interstate, you need technology that is very flexible, that can grow as you grow. So we chose NetSuite because it was a cloud-based, native cloud-based infrastructure, and it has the ability to add multi-subsidiaries, multi-currencies, support sales and revenue throughout multiple countries throughout the world. So that is really important. The other thing which was really important was the flexibility of the technology and also its ability to customize it where you want to. Now, I talked about standardization and trying to leverage the tech as it is, but you also need to still have technology that if you've got some secret sort of herbs and spices, how you want your business to run, you need to be able to have that flexibility in the decision-making and your process flows. So that was also really important. And then being able to have those real-time insights. So probably the first thing, the one system with global reach, that was super important for us. So we started in Australia. We grew our business over into the North America, so US and Canada, had to set up operations in both those locations, be able to manage all of the finance compliance and tax compliance all in the one system. So now you've got to do multi-country reporting. You've got, like I said, all the tax issues in the US based on state that you need to manage as well. So that was a bit of a challenge as well. So, and then of course, going to the UK, you've got a lot of additional challenges there with how the technology needs to manage customer data and those sort of things. So being able to have tech that globally can grow as you grow, but also you can, the cost of the technology scales as you scale. So you only need to spend the money when you actually need to bring the people on. So that was really, really important. When the technology is not fragmented, when you've got an ERP solution and all of your software is on the one platform, you can have a leaner team and you can have those real-time insights coming in because you're not transferring data or taking data out and putting it somewhere else to try to get those insights. I talk a lot about insights because the insights when you're running at pace is what you need to focus on. You need to see what's working, what's not. And that's really super important. The metrics, Harriet already mentioned some of the metrics that are really important, and that builds investor confidence. So if you have all your ducks in a row, you can slice and dice your data, your revenue, where the sales are coming from, which markets are successful, which locations are successful, which are not, why they're not. I would also say investors, and Harriet, you can jump in, but investors also want to know if you lose customers, who you lost them to, when you lose them, why. And so that capturing that data, because that's probably, no one does this well, but I can tell you the amount of times I was asked by investors, churn data, churn insights, percentages, it was just, it was crazy. So make sure you capture that if you're looking at scaling and exiting. So that was really important as well. So they're the sort of things. And then obviously having technology to build in automated workflows to be able to not do the double touching and double entry, and all of those things are really important.
Yeah, that's great. Thank you. Thank you, Annalise. That's awesome. Now, Harry, if we turn to and it's kind of one of these things too, Annalise, as you're talking about that before, Harry, we turn to you. It's kind of, I always think about in terms of finances, like particularly in a growing company, it's like we should be solving next year's problem today. And that's about getting out ahead and thinking about scalability, for example, or globalization if we're going to a new country, and getting that infrastructure in place to solve next year's problem today in that direction. Now, Katie, if we go forward to the next slide, Harry, what I would love is to walk this group through from really the investor standpoint, and how you see kind of the finance function, your a team's getting ready for funding and growth. Walk us through kind of tell us more a bit about 5V, but also talk us through kind of the framework that you guys think about and evaluate a company specifically to the finance function.
Yeah, sure thing. If we go to the next slide. So I can give you a background quickly to 5V. So 5V is a Australasian mid-market private equity fund. We invest in businesses across Australia and New Zealand and right across the business lifecycle. Whilst I said we're a private equity fund, we invest from venture capital. We've got a fund there. We've also got a growth capital and then a traditional later stage PE fund. So yeah, as I said, we invest in businesses in all areas of the investor spectrum. We also are industry agnostic. So we really just like partnering with excellent management teams who've built excellent businesses in growing industries. So yeah, and ultimately have global ambition. So that's a little bit about 5V, and I guess how we approach investing. I've touched on a lot of these points before, but if I work through it, so I wouldn't say that having a poor finance function, or not poor, but perhaps less advanced than other parts of the business, is a deal breaker by any sense. But it definitely does make an investment harder to make if there is deficiencies there. So as I touched on, the first point definitely is around trust. We want to be able to trust that the numbers that are being presented to us and the story that management is portraying to us is correct. And so we're wanting to be able to get real-time data to be able to prove that. On time, we've mentioned time and speed. And so that's one thing around how fast the business is going, but then also how fast a deal can move. So deals are often really, really slow until they're not, and we get to the point of formal diligence starting, and then they're fast by design. And so typically in an investor, we're more equipped to move fast on this. This is my day-to-day job. And so it takes longer for the business to get information. And if this does take longer, the more exposure you have to risk, and not necessarily business performance risk. I mean more things like tariffs or geopolitical things, or 5V, as I said, we're investors, so we're often looking at other investment opportunities, and if we're waiting on information, a different opportunity might come up and we might be drawn towards that. So these are not often in your control, and so you need the systems to be able to provide the data in a timely manner. I'd also say, as I mentioned, we're going to ask for different cuts of information in different ways. So say management are portraying, to Annalise's point earlier around customer churn, we've only lost 2 customers. We're going to ask for the data on that, and we're going to want to marry that, what a management team is telling us, with the data. And having this information in a timely fashion just mitigates the deal risk materially. I don't know, Chad, maybe you can comment on that, being on the other side of the table, around the speed that we can move and the need for quick information.
Yeah, I think that there's an element of when you get into a process like this, there's an element of being able to, I'll say, stay ahead, but definitely anticipate and almost trying to choreograph where where that potential investor is going. And so bottom line is you just have to try to be ready. And then I think it's one of those things too where, look, we all get thrown into these situations as as finance professionals, we're brand new. We've got to do some cleaning, but at the same time, Harriet and her team come into it. And so there is kind of like the trust element, or rather than trust, I would say like time can create doubt as well. So I think just being cognizant of that, um, but also too is doing kind of like your homework through, whether it's learning through your own experiences or through the experience of others, or situations like this, from learning from Harriet, is what can you expect, and what can we expect, and what should our teams expect from what Harriet and say her teams are going to ask. And that will allow us to be a bit more proactive, or certainly less reactive, to try to mitigate that time that would create doubt or lessen trust. So great
Yeah.
question, Harriet.
Yeah, it is a good point around trust, and leads me to the next point around. So we're, as investment professionals, we make absolutely we do not hide from the fact we are not operators. I cannot come in and operate your business, nor do I want to. I will leave that to you, because that's what you are experts in, and that's what we're backing. And so I would say that another point around this sort of information and that sort of thing is, you're almost interviewing, it is almost an interview for yourself. So we're not investing in the business, we're also investing in the team. And so while having a strong finance function is not going to be the driver of the investment during the whole period, it really will be. So we're evaluating during this time, is this actually the right team as well to deliver the growth and the scale up story that we're backing. So yeah, it is a little bit of an interview process as well. And so having that in the back of your mind is important. And then the last thing is, you're wanting to create a bit of a halo. So as I said, we've found the best business in a growing market with the best systems. We, potentially we might even be able to pay more for that, because we've fallen in love with the business. And I think if we go to the next slide, I cover this off here. So selling a business is a function of a multiple and earnings. And so you're wanting to be able to, get the highest price for you at the time when an investor comes in. And so you're wanting to be able to maximize value. And a lot of this comes down to the why. And you're saying we're going to grow, but we need proof points. So things like paying a forward multiple. So convincing a buyer, myself, that your next year's earnings is locked in. So you can prove with data that you've got a pipeline of opportunities, you've got a win rate, and we can prove that, we can see that there. And then the next thing, so paying a forward multiple, and then maybe potentially a higher forward multiple, because you can prove that historical churn is lower, or you've got a really long-term performance. It's only going from left to right in a chart. You've got really, really high retention ratios, all of those sorts of things. So there's lower risk of the revenues that you're forecasting. And then the last thing is around the cash flows as well, is that convincing us that there's actually lower level, not only is the revenue backed locked in, but the cash flows are also going to be high. You've looked at, we can analyze margin, we can analyze pricing, all of that. And so you can get to the end of it and say, hey, I know you said this, but we've proven up all of these points, and so now you can pay a much higher price.
That's great. That's great. That's awesome. And it's really all around an element of predictability that you're speaking to, Harriet, that reduces some of the risk that you guys would take as investors. But in order to be able to kind of articulate and really demonstrate that, you've got to be able to have the systems and the infrastructure to be able to kind of share that, to drive that, and convince the investors of. So that's
Yeah.
great. That's awesome. Folks that are here, we would certainly welcome, on behalf of Harriet and Annalise, any questions that you might have. Any thoughts, by all means, feel free to drop them. We would welcome those here over the next few minutes, if there's any of those.
Yeah, happy to answer any questions on scaling a business or technology, or, you know, what does the footprint look like when you go to different countries or anything like that.
Great. Well, we might leave the session there. If you do have any questions, please. Oh, I think we do have one question that's come up. I'll leave that to you, Chad.
All right. I just want to be Harriet. I'm gonna put this one over. Well, let me first answer it, because Chelsea, great question you asked. And then it would be awesome too if Harriet could engage. This is a great one, Chelsea. Is how does a CFO engage with PE firms? I'm curious to hear what Harriet has to say, but here's what I would say is I would say first off is um one, obviously know your business, but know what PE firms know what who might be interested in your business. That's probably number one. And then I would say the other thing too is while aligning with your existing investors and owners, begin to strategically develop some sort of informal, maybe formal relationships with potential or prospective investors, with the idea that what you're doing is, I use the analogy of connecting dots. Okay, you're talking about the business, you're talking about performance, you have a conversation. 6 months later, oh, hey, I said that we were going to grow top line 15%. We actually slightly exceeded. We overperformed by 17%, or we fell slightly short, but we grew margins by X percent. And you're beginning to kind of create those dots. And with a number of investors, with very targeted ones that might be interested on targets for your business, and and you're educating them about your business. That's how I would say that. As you consider that, Harriet, I'll turn it over to you.
Yeah,
How would
sure.
you answer that?
Yeah, so it's a really, you've phrased it really well. So investments aren't made overnight. So it is so rare that we will find a great business, have a first meeting, and then 3 months later we've invested. That never happens. It's so much more common that we've been following a great business for 1, 2, 3, 5 years, up to 5 years. We've been following the progress of a business. And so and Chad, to your point, hearing little tidbits about, oh, we're growing a little bit faster now, or, we said we'd do this, we said we'd launch this new product, we said we'd go into this new market, hearing these little pieces of information along that time, before you're ready for investing, it gets us up the curve. We can do research in the background, so it means that when you are ready to go, we'll already know the business. We won't have to prep as much in the background, and we can potentially pay, we'll not pay a higher price, but we'll be prepared to invest quicker than others. And it is just again, it builds that trust. So we're partnership investors. We're investing alongside a management team. We're not going to come in and take the whole business 100%. And this is like most investors. And so the more trust you can build in the team by having a longer term relationship, the more investor ready you'll be.
Yeah, that's great. And I would say probably the other thing, Chelsea, too, is um, play that long game, and as by being kind of like proactive, as opposed to, oh my gosh, you know, our owner, if we're family owned, says that he wants to sell the business next week. Then you're a bit back on your heels. Play the long game, get out ahead of it, identify those potential homes that might be good homes or investors, and then, as Harriet said, begin to kind of develop that trust, and you're really kind of earning your own credibility as well.
Yeah,
So, great questions.
I would also say that you need to know, you need to have very good clarity of thought around your business, what you're doing, where you're going, why you want to go there, and why you feel that they would be a potential good partner for you. So sort of you got to know your shit if you're going to have these conversations. Don't just go in and half-cocked going, oh, I should do that. You got to know your numbers. You got to know everything straight up, I would say. And also very important is know what you want, like have very good clarity of thought about, where you're going, what you want to do. Otherwise, you'll be having these conversations that don't really go anywhere.
Yeah, that's great. Did we have any other questions?
Yeah, there's a couple there, I think.
Let's see.
Manage the transition of the business from acquisition to completion. Any words of advice? Transition, acquisition, I just did that. Well, but it was with Oracle, so that was a journey. So after working through a million lawyers, yeah, it's that is Harry, you might want to jump in from an investor standpoint, but it is a big journey. There's a lot of pressure on a lot of people to keep providing information and numbers and keep the business moving at pace of where you want to go. So it is a lot of work, and it is very challenging. Harriet, what do you think?
Yeah, so I'd say, I mean, under most sale agreements, there are clauses where information needs to be provided between this period between signing and completion. And I would say, yeah, to your point, Annalise, around just making sure that it keeps going the way it should be going. Yeah, I mean, 5V take an approach where the minute we sign, we almost start helping the business then. So we want to make sure that where there's no gap between the two. I mean, some of these time periods between signing and completion can get quite long, depending on what regulation and what approvals you need and things like that. So yeah, I would just say don't do anything dramatic and make sure that the business keeps going in the right direction.
Yeah. You just have to
One
hit
other
you got to keep hitting your numbers. You do not want your revenue to drop off or your logo count to drop off at all.
And there could be a few different directions this question was asked from, but if it is, and I would say this is if it's with respect to integrating a company that say you might acquire or that your company might acquire, I think one of the key critical factors as you think about the integration of say that acquisition or investment that you made is first, very fundamentally is I really identify and define, and this is not just within finance, but across the entire executive team, the success criteria. And then work very cross-functionally to really drive towards that investment criteria. Because where I've seen integrations fail is maybe where that success criteria isn't very well done.
Okay, I think we have maybe time for one last question here. So I think this again might be one for Chad and Harriet. Last one is, what reporting/compliance standards do PE firms expect portfolio companies to adhere to?
Go ahead, Harriet.
Yeah, so I can take this first. So there's never an expectation before we go in that the business will have super high quality, all I's dotted and T's crossed. But I would say going forward, we have an obligation to our investors that all of your finance, all of your reports and things will be audited by typically, a Big Four maybe big six, whatever number we're up to now, audit firm. And so there's definitely a requirement for that. And then the other thing I would say around compliance standards, it definitely depends on the different businesses. So 5V is a B Corp. And so we're the first, we used to be the only, now we're the first Australasian B Corp certified investment firm. And so what we mean by that is we as a firm are B Corp. We don't have to invest in only B Corps, but it means that we have an obligation to our investors to be reporting things like ESG emissions and all that sort of thing. And I would definitely say that that's going forward a much bigger focus. And so it depends around the different businesses and the different industries. There's no sort of a clear cut you must follow this regulation in this, but I would say there's definitely expected to be a step up in compliance and reporting following taking investment.
Yeah, and the other sort of probably point or little kind of twist I would put on this is like, if we go back to, Harriet and her team doing due diligence, and even to the earlier question about, hey, how do you kind of reach out and engage with PE firms, is from our table and from our seat as the CFO, is like, we should be doing our own due diligence on our own potential investors as well. And I think Annalise mentioned it by using the phrases like, who do we want to partner with? And I think as part of that sort of overall consideration and diligence of that potential future partnership, we should seek to understand what are the reporting requirements that certain PE firms that we're considering might require. Because the reality is everyone's a little bit different. While there might be a number of commonalities, there might be various twists and various caveats that we should be aware of before we walk down the altar together.
Fantastic. Well, we might wrap there just on time. If you're interested in learning more, you can head to the following websites. I know that you can also connect with our speakers on LinkedIn and continue the conversation there. I'd like to sincerely thank Zone & Co for hosting today's session. I know that I learned a lot and gained a lot of awesome insights. Thank you, Chad, for driving that discussion and for sharing your insights. And lastly, thank you, Annalise and Harriet, for sharing your learnings and your expertise. And thank you, everyone that joined today. As mentioned, this has been a recorded session, so we'll be sure to send that through to your inbox shortly. Thank you, everyone.
Thanks.
Thank you.